All right. So good evening, guys. How we are doing? I hope you can hear me clearly. Can everyone hear me clearly right now? Yeah, I want to be sure if you can hear me clearly. Can you all hear me? Please, if you're in the room currently, kindly help by turning on your camera. I want to be sure everyone is with me. All right. So I will take that as everyone can hear me clearly. Okay. So I'll be going straight into what it is for today. First thing first is most of people who actually subscribe to the channel have unsubscribed. That's quite a thing, but of course it doesn't really matter. I guess what matters is the content I'm putting out there. So if the content is all good, I'm fine. So let's quickly go straight into what we have today. So just a recap of what we did the last class. I want to be sure everyone can hear me. Please, if you can hear me clearly, loud and clear, let me know, please. If you can hear me loud and clear, let me know. Bro, your camera is not on. I'll have to remove you. Jolayemi Damilola, your camera is not on. I need people whose camera are on. Okay, so um, I hope we all are. If you can hear me and we're on the call right now, like you are on StreamYard right now, can you just go to the private chat and type in yes? Please help me so I'll be sure everyone can hear me. Okay, good. So let's go straight into what we have today. So just a recap of what we did the last time. We had to talk about trend lines, looking at how we can use trend lines and the W pattern to make decisions in the market on any currency pair at all. And then we also looked at how we can be able to navigate if we have more than one touches on the trend line and so on and so forth. So, but for today, I want us to focus more on going in depth into everything I have taught. So I'll be starting today's class by talking about the basics of the market, right? I simply explained it as supply and demand. I told you that the market is actually based on supply and demand, right? But now I also want to make you know that based on that supply and demand, you can still also have the market being based on support and resistance, okay? Every activity, your trend line can act as support, can act as resistance. Anything you do, any pair you trade, any analysis you use, you can actually act as support and resistance. Your Fibonacci retracement, your anything can act as support and resistance, and the market is built on those things. Okay, your channels can act as support and resistance. Your other blocks, other flows, and all those things can act as support and resistance. So everything in the market is built on support and resistance, and then it will not really make sense if everything is built on support and resistance and you don't have the idea of what support and resistance is. Do you understand? I hope that makes sense. So you have to be able to understand what support and resistance is for you to be able to, proceed with every other thing that you are doing as regards trading. So now let's go straight into the charts. And then, like I said, I won't be holding anything back. and then I'm just going to be giving you guys the full juice here. So I hope you are with your pen and you are currently in a place where you can focus fully. I hope you are with your pen and you're in a place where you can focus fully, because like I said, I'll be dishing out something that will be impactful to you as well as um, helpful to you. So now, just looking at the charts, it's pretty much simple when you have an idea of what you're doing, rather than just not really having an idea of what you're doing at all. So you have to be able to have an idea of what you're doing. Do you understand? That way you can have a better understanding. Do you understand? Understanding of the whole idea behind the charts. So now, looking at this particular looking at the chart, of course, I'm going to be going through. Let's just take a different pair today, okay? So I'm going to take GBP USD. That's going to be the pair I'll be trading today. That's the pair we'll be looking at until today. So GBP USD. So we have GBP USD right here, and then currently we are up on a little bit of a spring here. And then if you can remind me, what were the steps, what were the things I told you to do whenever you come to the market? Did I actually tell you that? I've actually told you guys what to do whenever you come to the market. First thing you do. Did I actually tell you what to do first thing? I'm not sure I did. Did I? Anybody? Did I tell you what to do when you come to the market first? If you remember the previous class, did I tell you what to do first when you come to the market? No, okay, good. So it is simple. Make sure you're writing these things down. This is the step you want to follow whenever you're coming to the market. Okay. Whenever you're coming to the market without any idea, without any bias, you're coming into the market neutral. First thing first is you want to be neutral, okay? And you only want to trade not what you think, you want to trade what you see. You understand? First thing first, you want to come into the market neutral. You don't want to have any idea of what the market will do or whatever it is. You just want to come into the market with, it could be a buy or it could be a sell. You are neutral. You don't have any idea yet. Okay. And then you want your every activity you do to be based on what logic, on what is seen, not what you think. You understand? You want every decision you're making based on what you see, okay, not what you think. Now, then the next thing you want to do is you want to go ahead to go to the 4 hours time frame. Now, this time frame varies, okay. The essence of this time frame is so you'll be able to see the market from a wider view, okay. Now, when you come to the 4 hour time frame or the daily time frame, if you go to the if you're using your system to analyze, you will see the time frame at the top here, and then you'll be able to see the different time frames that we have. We have the daily time frame, we have the 4 hour time frame, and so on and so forth. Okay, so you can see 4 hours, 2 hours, 1 hour, and so on and so forth. So we have different time frames, and for different reasons. Okay. Now, I didn't really tell you guys that there are different types of traders. Okay. Now there are different types of traders, and then first type of trader is the scalpers. There's the scalper. There is also the day traders. Okay. There is also the swing traders. Okay. So time frames determine the type of trader you are. So if you are a swing trader, you want to focus on the 4 hour time frame. Okay. If you are a day trader, you want to focus on the 15 minutes and 30 minutes or even 5 minute time frame. If you are a scalper, it means you want to focus on the 1 minute time frame. Okay. So I'm going to repeat that again. There are different types of traders. The first one is the scalper. The second is the what, day trader. The third is the what, swing traders. So now these are the basic knowledge you need to have. There are other types of traders. There are the institutional traders and all of things. But these are three basic knowledge you need to have. Okay. Now the scalper focus on the 1 minute. The day traders focus on the 15 minutes, 30 minutes, or sometimes 5 minutes. And then the swing traders focus on the 4 hours, right? Now, the focus here means they execute their trades on these time frames. Okay, they execute their trades on this time frame. So, if you are a day trader, you don't have any business executing your trade on the 4 hour time frame. Okay, now the only thing you will use on the 4 hour, or what you use the 4 hours as, is just to develop the overall trend of the market. Does that make sense? So when you come to the 4 hour, like I said, everything, I hope you're writing these things down as steps. So first thing first, you're coming to the market neutral. Second, you don't want to just be, how will I put it? You don't want to be biased. You just want to just come in neutral. Okay. Now then, you want to go to the higher time frame, the 4 hours, to look at the overall trend. Okay, because as a beginner, you want to know that the strength of the market is in the trend of the market. You can write it down. The strength of the market is in what? The trend of the market. So if you are going against the trend, it means you are trading against the strength of the market. If you are going against the trend, I'm going to repeat again, it means you are what? Going against the strength of the market. So you have to be able to know that. Now, if you look at it from the daily time frame, all you can see is that the overall trend, your trend line is also something you can use to determine the trend. Now, if you draw your trend line upward, what does that tell you? That tells you that that's a what? A upward trend. Does that make sense? If you draw a trend line downward, that tells you that what? That's a downward trend. But now looking at the chart, you can see that the overall move of the market is to the upside. True of us. So then that tells you that okay, everything on GBP USD right now should be more focused on what? On buys. So that's what I'm looking for on the 4 hour time frame. Okay. Now all I've just done on the 4 hour time frame is just decide what the trend of the market is. Okay. And then you can sometimes use the daily time frame as well. But you don't want to use a whole lot of, like I said, historical data is what you pay attention to, right? Now you can see that if you turn to the back here, if you look at the downside here, look at this particular downside, you see Thursday, 26th September 2024. Okay, you don't have any business with all those things. You just want to come into the current year, okay, the current year where you're trading in from, which is January to now. I mean, that's like 5 months, and that's fine. So you can easily see that from January to now, all BTC has been doing, or what GBP has been doing, is we're pushing to the upside. So that tells you that what? That you should look more forward for more buys in any point at which you are trading on BTC. So first and first is decide what trend the market is on. It is 4 hours. You see it on the 4 hours, upward trend, downward trend, based on your trend line and based on the overall direction of the market, which tell you that what? That is the strength of the market. So then you can easily then go to your what? To the lower time frame. Now, what I do in the lower time frame in the sense that 1 hour or 45 minutes or 30 minutes, I mark out the recent support and resistance. Now, support and resistance are simple points where the market takes sharp turns from. Support and resistance are major points in the market where the market actually takes sharp turn. I mean, when I mean sharp turn, it automatically just changes its direction. You see that? So then now the up part where the market changes direction to the downside is known as resistance, while the downside where the market makes sharp turn is known as the support. Please, I want to make sure, I hope you're writing these things down. Okay. Now you can see that I've explained what support and resistance is using this simple terminology, right? Where the market makes sharp turn from. Now, if market is pushing to the upside and all of a sudden it rejects the downside, what does that tell you? That tell you that what? That is a what? That is a resistance. True or false? So if the market is coming to the downside and all of a sudden it changes its direction to the upside, what does that tell you? That tell you that what? This is actually a what? A support. Does that make sense? So you want to be able to know that the market is built on, like I said, everything that you're doing on the market is what built on support and resistance. So now let me show you something on the trend line that you find amazing. Now look at the trend line we drew. Look at this trend line we drew on the 4 hour time frame. If we get this, okay, let me put a price yet. I'm going to be giving out something today, but right now I just want to know if you guys are following me. Now, like I said, every knowledge you have in the market is built on what? Support and resistance. Okay. Now, look at this particular trend line we drew. What is it acting as? Now I told you that where the market makes sharp turns from, okay, So if it is from the upside, it acts as resistance. If it's from the downside, it acts as support. So what is this trend line acting as? Anybody? What is the trend line acting as? Look at the trend line. What is it acting as? Oh, no, no message in the chat box. Anybody? Person watching on YouTube. We have only one person watching on YouTube. That's sad. Well, no problem. Not everybody will, not everybody will go to heaven, as my lecturer will say. Not everybody good as support. Did you see that? As support. Now it acts as support. What if I tell you that now there's also a trend line here that acts as a resistance? Can you see that? Can we see that? Now I'm trying to look at the points where we have multiple touches. Okay. Now this is where it gets interesting. This is resistance as support. Your support can act as a breakout. Everything change or what breaks out of the trend like it converts automatically to the resistance trend. Come back to that trend it automatically exists. Short breakout, this does part there. Hope everyone can see my screen right now. Okay, can everyone hear me clearly now? And can you see my screen? All right, good. So now, if we go ahead and look at how price has acted on that trend line, you will see that it has acted as both support and resistance. Okay. Now, same way you have your support and resistance on a trend line, you can also have your support and resistance on a straight line. Okay. You can also have your support and resistance. It means that like something we drew here. The support and resistance could just be like this. Can you see? Price come up, push down, push down, went up again. Now, like I said, the market is based on what? Like I said in the previous class, the market is based on what? Repetition. So the fact that price already rejected from this point, the fact that price already rejected from this point twice tells you that whenever price comes back to that point, okay, there should be a possible rejection. Does that make sense? I hope that makes sense, guys. Now, the fact that price already rejected from this point, that should tell you that whenever price come back again to it, which is what it did here, what happened? The price not reject to the upside? It did. Price rejected here once, second time, the third time. Now, price could possibly come back to this zone again and still reject off it. Okay? I hope I'm making sense. I hope I'm making sense. So the fact that there is a sharp turn in the market or at a point in the market doesn't mean you just ignore it, okay? You can pay attention to it. Support and resistance is someone's strategy. That's the strategy somebody uses to create this market. That's the strategy someone uses to trade this market. David said I should come again. So I said that when there is a sharp turn in the market, either from the upside or the downside, you want to pay attention to that point, okay? Because whenever price come back to it, there is every tendency it will repeat same activity. You understand? So when we are using support and resistance, we said it that support is the baseline. Just take it as support is the bottom, resistance is the top. You see that? So resistance is at the top, support is at the bottom. I hope this makes sense. So support is like a floor, resistance is like a roof. Does that make sense? So support is like the floor, resistance is like what? A roof. I hope that makes sense. So if you don't understand this idea, you have to just go ahead and practice over and over and over again. Okay, so whenever you see a sharp turn at the top, it's automatically becomes a resistance. Whenever you see a sharp turn on the bottom, it automatically acts as well as support. I hope that makes sense. So with that, one could easily see that trading is very easy. You just need to just be there when it is happening. You don't have to just be waiting for someone to, like I said, support and resistance is someone's strategy. Okay. So now let's go ahead and take a deep dive into what a Fibonacci retracement is. Mr. Israel specifically asked about that. So what a Fibonacci retracement is I'm going to tell you that this is a golden rule. Okay. The Fibonacci retracement shows you potential reversal points in the market. Okay. Fibonacci retracement, FIB. Let me show you. You see it here. You see it on the third. You see Fibonacci, FIBONACCI. Now it shows you a potential reversal in the market. Now how I use my Fib is very simple. I pay attention to certain points and then that's all I do. So I'm just going to let's go to the 15 minutes time. The 4 hours is too noisy. On the Fib retracement, there are points where they call the golden number, and then there are points where we call the regular, just the regular, the regular, how will I put it, the regular number, and then there is one we call the super active number. Okay, you might have not heard of this somewhere else, but the super active number, there's a point where you have to know that the Fibonacci, whenever price comes to this point, and it depends on the pair, you have to know that Fibonacci retracement also depends on the pair. The way Fibonacci acts, okay, depends on the pair. So you have to know that it could act differently on BTC, it could act differently on GBP US, it could act differently on gold, it could act differently on USDJPY, it could act differently on all these pairs. Okay, so you don't have to always stick to one rule. Like, okay, I'm sticking to this rule. So I'm just going to draw the Fibonacci retracement now. Let's take this point as a resistance point, and let's take this point as a support point. All right, we're going to do the same thing now. Let's take this point as a resistance point, and let's take this point as a support point. Good. So now, the Fibonacci retracement tells you that if you're looking for an opportunity for a buy, okay, you're looking for an opportunity for a buy. When you're looking for an opportunity for a buy, it is different from when you're looking for an opportunity for a sell. Okay. Now you want to take your fib like this. If you're looking for a sell, you want to connect from a support to a what? To a resistance. A resistance to a support, sorry. Not a support to a resistance. A resistance to what? A support. You're looking for a sell support. You're looking for a buy. You want to connect your fib from a support to a what? To a resistance. Now take a look at these 2 points. You see that they are showing different things. Now the point where you want to pay attention to, you see a lot of figures here, right? You want to pay attention to the 0.5, 0.618, 0.5, 0.618. I would have told you the usefulness of others, but this is a free class. So I'm just going to show you the general rule: 0.5, 0.618, 0.5, 0.618. Now I told you that you're looking for what? A sell. You take it from what? A resistance to a what? To a support. Buy, support to what? To resistance. Can you see that? So your fib retracement, when you tap on it, you want to click on, if you're looking for a buy, you want to click on what? The support first, then take it to the resistance. You're looking for a sell, you want to click on what? The resistance first, then you take it all up to a support zone. I hope that makes sense. I hope that makes sense. Now, for me, the Fibonacci works aggressively for me on gold. So I don't really use Fibonacci on GBP USD. I just use my trend line, support and resistance, and that's it for GBP USD. But let's take a look at gold. Let's see how the fib retracement reacts on gold. Now let's take a look at this recent activity that happened last week. This is, let's look at this. Now, of course, we've seen a sharp rejection from this point. Can you see that? Now, we've also seen a sharp rejection from this point. So that now we have a resistance. What does you say? You're looking for a sell, so you take it from a resistance support. Which points will be reversed on 0.5 or what? Can you see how aggressive you are today? Can you see that? Am I making sense? Are you getting it? Hello, guys. Can you guys hear me? Do you see how sharp it rejected at 0.5? Can you see that? So you have to be able to pay attention to this. Now, this is for gold. Okay, I use my fee retracement on gold aggressively. You could just make use of it as a clear confluence for your decision making. Okay. So now look at this. Look at this. Just like I said, that your support can act as a resistance after a breakout. Okay. Now, what level is this? What level is that? Can you see? This is a support. Then this is what? A resistance. Can you see that? So using the knowledge I just shared with you now, you could easily add these two confluences, your fib retracement as well as your support turn resistance to make good profit for yourself. So you saw this support level being maintained. Out this break, practically, like I said, once the break occurs, there will be a reversal to that support, and then you should expect it to convert towards a resistance. Then you should push price down. Because, of course, resistance is the point where price rejects off. Does that make sense? So now, using your fib retracement, attaching it to this particular knowledge of support and resistance, you're going to be a beast if you're trading gold. You can see, like I said, for a sell, you look at for what? Point A to point B, support, resistance to support, and then you pay attention to zero point 0.5 or 0.618 for sharp decline. Okay, good. So now let's look at it from an instance of a buy. Good, I can see it here now. On the instance of a buy, we could see that price rejected off this particular support level. This is a resistance turn support. You should be able to identify these things by now. Then you could see that it created this sharp decline at the top, which is a resistance. So this is the support. So I'm going to take it from what? Since we're looking for a buy, I'm going to take it from support to what? To resistance. Can you see that? What point did it reject on? Can you see? It rejected on what? 0.5. So if you add your buy position right here, waiting for price to just push to the upside, can you see? Putting your stop loss slightly below 0.618, expecting that aggressive push to the upside. Can you say that you'd have made good profit? Can you say? Now, my secret to Fibonacci is that whenever you are taking your position based on Fibonacci analysis, you want to target your risk to reward of 1:4. There's a reason why I'm saying this. When you are using your Fibonacci on gold, you want to target what? 1:4. That is because there is something that is known as fib extension. So whenever price rejects off any of the points on the Fibonacci retracement, there is a point where price is always targeting to go to, and that is my concern. So I'm going to show you this, and I will not come over it again. It's a premium stuff, but I'm going to share with you. If you come to the Fibonacci tool here, you will see something called the trend-based fib extension. I'm giving out gems here. I told you it's going to be powerful. So if you're not taking notes, it's on you. Now there's something called trend-based fib extension. So that trend-based fib extension shows you the potential point where you should take your profit from. So from point A to point B, you have a fib like this. Now, whenever you see a rejection of 0.5 or 0.618, you want to know that your target should be what? 1.8, 1.618 at the top. Using your fib what? Fib extension 2. Can you see that? Trend-based fib extension 2. That's the two you're using. So if you are buying off from this point, you're going long here. For you to maximize this trade, your take profit should be here. Can you see that? Now, what I'm showing you is a live. You can see it is live. It's not as if I'm lying to you. Immediately it tapped in there, what happened? Did it reject or it did not reject? Immediately it tapped in there, what happened? Did it reject or it did not reject? Can you see? So whenever you're trading your fib retracement, using your fib retracement as a tool, you want to target 1:4 minimum. You want to target what? 1:4. So if you're risking $10, you should be targeting to make $40 if you are using your fib retracement tool as a analysis. Do you understand? All these things I'm doing is an analysis, forgetting the trend line and all of this like that. But this one, if you're using your fib retracement tool only as an analysis, you want to focus on what? 1:2. Now, you want to take out this trend-based fib retracement and then do what with it? Trend-based fib retracement and then look at where 1.618 is and set your take profit there. It might tarry, it might take time before it gets there. It might panic you, but it will eventually get there. That's something I promise you. This is how to maximize a trade. That is why I tell you that I don't preach signals. Signals will tell you once you are up 50 pips, you can take your trade and exit the market. I mean, but I am teaching you this, the raw truth here. This is how you catch trades. Those 50 pips are not trades. Trades are trades that you catch 100 pips, 500 pips. That is always my target whenever I'm coming to the market. And I know that I might not catch it the first time, I might not catch it the second time, but when I catch it once, it will cover up for all my losses. The difference between a profitable trader and somebody who is just trading is how much he makes when he is making profit and how much he loses when he's losing. Does that make sense? So you have to be able to know that when there is a winning trade, you milk it. Do you understand? You suck it dry. You press the neck till you understand. You don't have to panic. Just let it. Just trust it. That is one analysis that shows that particular point there. Let's go ahead. So it not look like oh Daniel is just giving us bullshit. It's just bullshitting us. All right, no problem. I'm gonna let's see. Good. Let's look at this cell here. Mm, okay. I have to know that this analysis doesn't mean anything that happens, okay? Doesn't mean that it will always go right. It is just an analysis. Do you understand? Let's look at an instance of a sell, right? You went short based on an analysis. Now you see, price got to 1.414 and it rejected. What if I tell you that price is still coming back to tap on this point? This particular sale that's currently happening on gold is coming back to tap on this point to complete that fib retracement. Can you see that? So if you went short here, your take profit should still be here. Like I said, it may tarry, but it will come straight right there. You would have been panicking immediately started coming back to your entry point. I'll be like, whoa, what the fuck? But see, this is forex, man. If you can't trust it, you can't make money here. You understand? You have to trust it. Now I'm giving you a straight direction of where gold is going to. So if you are wise now, you'll be looking out for a sell opportunity. Just take your trend line. I'm seeing a trend line already. So I know what I'm going to do on gold this week. I know what I'm going to do on gold. I know that it is still coming back to that what 1.618 point before we see a possible rejection. I hope that makes sense. I'm giving out solid knowledge here. So if you're not taking it, you are sleeping on what's possible. I hope that makes sense. So now for gold, we are looking at gold tapping into the region of what? 3,263.250. That's what we're looking at gold. We're looking at gold coming into that point. Now, if you look at it carefully, let's quickly analyze this and then remove this drawing. If this thing happen, if this particular analysis happen, I'm telling you guys we have to kick out. Now let's take our trend line. I'm going to connect these two highs here. So I don't force my trend line, so I don't draw my trend lines anyway. And then I'm just going to connect this particular two lows here. Good. So right now, I'm not going to rush into the market. I'll wait for price to come back and retest this trend line, which is tomorrow. Okay, I'll wait for price to come back and retest the trend line. And what will happen? I will sell it off or go short. Now I'm going against the trend, but no problem. I'll go short. That's where expertise comes in. And that's why I'm sharing you with this knowledge right now. I don't need to use too much because gold these days is very, very volatile. So with this now, I already have a potential bias on gold. So I know based on what Fibonacci retracement and also based on what on trend lines, I know where the market is coming to. I hope that makes sense. So looking at this whole analysis I have shared with you guys here, do you have a question for me before I move on? Before I move on, do you have a question for me? Quick question, quick question. So you see that it is beyond just seeing a lot of charts. It is, do you understand what is happening on the chart? Do you understand? It is beyond seeing a lot of candlesticks. Do you understand why this particular candlestick rejected at this point? Do you understand why it is coming back down? Do you understand why all of this like that is happening? Now, if you want to look at it from a different angle, yeah, you could still look at it from a different angle. Now, I could still take this particular high here as my new resistance and this particular low as my new support. Let's take this point first. So for this particular point, from this point here to this point, price used the what? 0.382 point as the rejection point. Now, if you take it a little bit further, looking at the overall structure to this point, yeah, yeah. Yes, I don't do any because. So if you look at it from this point here, now we'll be able to see that it has an interest of actually tapping off at the point of now I can see it rejecting off the 0.618 zone. Can you see we had a little bit of an extension to this point. We had a little bit of an extension to this point. But now the point still remains that regardless of this analysis that we've done, right, there is something you have to do. The higher the time frame, the stronger the analysis. The higher the time frame, the what? The stronger the analysis. Does that make sense? Now, if you look at this particular chart here on this particular time frame, I see more of sales. And the reason why I'm targeting this point is because you see my analysis are even meeting each other because there is a zone that needs to be tested here. Can you see this? There is a zone that needs to be tested here. Price was coming closer to it and then it rejected off. But then there is still a zone here that needs to be tested somewhere around here before we can see more potential buys on gold. So we need to see price tap into that point and then we see some rejection to the upside. I hope I've been able to break down gold charts to you guys this evening. I've been able to show you guys what's possible on gold. So any question for me? Is there any question for me, guys? 49 minutes gone. Any question, guys? Any question? Now, one of the secrets to becoming a better trader is also emotions. Now, let's leave out the chat and come back to emotions. Now, this is where you need to understand that everything you're doing is based on emotions. Every decision you make, every money is on the line. So you have to understand that the emotion have to be in check. Certain routines have to be done for you to be able to be so strong against the market. Because every time it's a war, I tell people that whenever you're going into the market, it's a war. It's a war. You're coming into the market to fight crazy wars. Now, I understand that everything I've taught you guys, you might not really understand, and that's fine. But you have to understand that you have to go ahead and watch this video again, watch it over and over and over again before I convert it to a private video. Go ahead and watch it over and over and over and over and practice. Now, when you're not practicing, don't practice on Monday and practice next week Monday. You won't get it. You practice Monday evening, practice Monday night, practice Monday midnight, practice on Sunday, practice on. You have to keep on practicing. If you don't practice these things, you won't get an hang of the whole idea here. Do you understand? So you have to practice as much as you can, as many times as you can, and you have to be able to know that there is more to just being a forex trader. There is more to the flashy lifestyle. There is a mindset that is required of you. You understand? And you also have to know that whatever you're risking, that is what you're risking. Whatever you're risking, that's what you are risking. I hope that makes sense. So if you're risking $10, forget that $10. Don't think of it. Don't attach your emotions to money. Okay? If you're risking $100, let it be $100. Don't move the stop loss and do all the no, don't do all of things like that. Okay? You are risking $20. Stick to that $20 and then don't change the idea of, oh, what if price go against me? You've done your analysis, you've done your homework, and then all you have to continue doing is trust the analysis. Trust. You understand? Have faith in what you've done. Have faith in the proper analysis. If you are right, you are right. Now, where practice comes in, where devotion and all of this like that comes in, is that it will help you grow. It will help you see the market as not a playing ground. It will help you see it as serious business. Because money is always on the what? On the line. Money is always on the line. No matter, see, immediately you click on that buy or immediately you fund your wallet, your money is at risk. So you have to be able to put your mind down. Know that before you click on that buy button, if you don't see a clear reason why you should, then you shouldn't do it. Talk more of even stacking up. I've seen some people on $100 account doing pressing buttons like, bro, calm down. You don't even know what you're doing. You understand? You have to know what you're doing before you go in hard. Because if it go against you, it will play with your psychology. You will believe Forex is a scam. You understand? So you have to be able to know what you're doing before you take in those positions. So now I'm just going to go straight into other aspect of today's class, which will also involve the point where we will actually have to ask questions, right? Now, one of the major questions most people have asked me, right, I'm going to be debunking some of the what's it called now? The myths that most of you have heard about Forex. And then part of it is where is it? Let me go ahead and read through you guys' messages till I time. You need a lot of money to trade Forex. And now I told you guys that you don't need a lot of money to trade Forex. Now, I'm going to be talking about why did I tell you don't need a lot of money to trade Forex? The reason is simple because there are a lot of people who currently are willing to invest in you. There are a lot of people who are already knowing what Forex is. Forex is already becoming so popular that most people are even looking for people who they can give their money to and then will trade it. But do you have the skill set? Forgetting about investors, let's look at what other ways can you get money. Prop firms. You can get trading accounts for just $15. You can get a 5K account. If you go to Marvin Trades, you can get a $5,000 account for just 15 what? For $15. And $15 is just like 25,000 or something like that. And that could come from saving just in 2 weeks, 3 weeks if you are serious minded. Now, I'm telling you that if you get funded 5K, it doesn't mean you'll pass it. Don't think that's just the end that, oh, I already have 5K account. Then the next thing is I'm already a big guy. Come on, you are not. You are just new. You don't even know anything. You understand? So, but funding is not a problem. You can imagine taking your 20,000 naira um to the market. You see, it will go in 1 second. But imagine you investing that 20,000 naira into a prop firm that can actually give you a $5,000 account, set you up to the tax. Because you yourself, you want to be set up to the tax. You don't just want to just be, how will I put it now, just be trading regularly or just be doing activities regularly. You want to meet up with certain requirements. You want to groom yourself. The thing prop firms will do to you is they will help you manage your risk understanding. They will make you understand how risk management works. And that is what you will need, even if you get funded your own personal money, even if it is 5 million, even if it is 100 million. If you don't have proper risk management mindset, you will blow that money off. So I advise you that this particular money is the problem. I don't have money to trade. It's a lie. You can't tell me that you can't find 25K even as a student. Tell your parents you need to buy one textbook and then just fund in the money and buy the prop firm. You can just, you know, you can just, how will I put it now? Just purchase the account and then start trading. You don't even need to have laptop before you purchase this account. Let me show you guys. I look like Daniel is just capping. Daniel is capping. I suppose you feel like I used to cap a lot. I hope you can see my screen. Now I'm going to go to the main site. Can you see Marvin Trading? Now this is the cheapest profile you can see in the market right now. I hope everyone can see my screen. Good. Can you see? Get accounts for as low as $15. They give you steps, they give you a lot of things like that. Now they are currently even also running instant funding. Can you see? You can also do what? Get an instant fund whereby you don't even have to do what? You don't even have to pass challenges. You just have to meet up with the requirements and you will withdraw your money instantly. Let's look at it. Let's look at the instant funding. Um, See, if you click on instant here, can you see? Now they are telling you that $58 you can trade, and now they just added MetaTrader 5 on the platform, so you can trade on MetaTrader 5. If you can get a 58 $58, which is like probably 800K, 80K or 70K, you will get a $10,000 account. Now click on 5K. If you have $29, you will get a 5K instant funding. If you need a 2K, all you need is $19. And then you see they tell you the minimum withdrawal is 3%. That means you have to make $60 on this your on what on your 2K, and then you can be able to withdraw that $60. Come on, that's changing the game. I don't know if you understand what I'm saying here. That's changing the game. So you cannot tell me funding is the problem. I don't have money. I don't have money to trade. It's not true. This is money here. I'm sharing with you already. Now they tell you minimum withdrawal 3%, drawdown 3%, daily drawdown 42%. That means you must not lose $40 in a day. If you lose $40 in a day, you've lost the account. Your total drawdown must not be what? More than $60 on a $2,000 account. Can you see that? So if you lose $60, it means you've lost the account. So they are putting you to a test. They are putting you to a challenge that, come on, you can do this. You don't have to risk too much. Proper, you have a $2,000 account, and they are telling you don't lose $60. Can you see what I'm saying there? Yes, if it is a personal funded account, you'll just be risking more. You even risk $100. But that's against proper risk management. On proper risk management, you shouldn't be risking 1% of your account on any fucking trade. On 1%, 1% on a proper when you're doing proper risk management. So be able to go through all these things, look at it, and then see. You see, this is $18. Simple thing. If you want to go for 100K instant funding, go ahead and buy what $549 and MetaTrader 5, and then what they tell you, don't lose up to $3,000, and then daily drawdown, don't lose $2,000. I mean, if you're trading a 100K account, you shouldn't lose $3,000 in a trade or even in a day. And then the minimum withdrawal you can make is $3,000. So until you hit the $3,000 mark, you can't withdraw your money. Okay, you can't withdraw your money. You can't withdraw the profit. So you have to what? You have to make $3,000, and then I'm going to say minimum profit split is 80%. So they will give you 80% of the profit. If you've made $3,000, they will give you 80% of that $3,000. And then you're good. And all you invested in this particular thing was what? Over 500 and something, 549 dollars, which could be equal to probably 700K or 800K right now. I mean, I know a lot of people might not have that money. So I'm giving you this easiest option, a 2K account. So go ahead, look for $19, save it up, take your time. But before you get this account, make sure you have a skill set. Make sure you have what you want to go and do. Make sure you have an idea of what you want to do before you go ahead and get this account. Because if you meet the loss limit, they won't give you your money back. If you meet your loss limit, they won't give you the money back. So you have to be able to see it from this aspect and be able to understand that the market is your only place to make money from if you want to take this skill set seriously. So now, without any further ado, I'm just going to go ahead and just ask a question. So if you have a question for me, please let me know. Do you have any question for me? Do you have any question for me, guys? Okay, Buchi David says, okay, no, okay, I'm not sure he has a question. Do anybody have a question for me? The site for the Profim account. So I'm going to send it to you. Just copy the link here. Just click on the link. I'm sending it right now. Just check the comments on YouTube. I've shared the link already. I'm going to send it here in the private chat as well too. So you can just click on it and it will take you straight to the site. And they are legit. They will process your withdrawal. I've made profits from them. I created 5 of their accounts and I made profits from all of them. So if you're wondering how I'm making my money, I trade profits like mad. So you have to be able to know what you're doing, because nobody's coming to save you. You are going to save yourself. Nobody, this skill set, nobody's coming to give you money. You have to find it yourself, and that's the best way you can find it is by what? Trading prop firms. Telling you all the big traders you see today started from prop firms. Go ahead, save up $19. It could be 27K, 28K, whatever K. buy that account and start trading. Don't lose $60. Use one strategy and see if you make profit, and if you are consistent. Trade one pair, one strategy, and one session. There's something I have not talked about, which is the different sessions we have in the market. We have the London session, the New York session, and the Asian session. Okay. So now it's basically the London session works in the morning, while the New York session in the afternoon, and then the Asia session in the night. Okay, so good to know that. You should be able to know that as well. There are different sessions, so you have to know which session your pair move. Like I said, I trade BTC in the afternoon. That means I focus more on the what New York session on BTC USD. My trade, I wait for the pattern to form, and I take my trade. If it goes in for me, if I lose it, no problem. Okay, so from the teaching today, it's obvious that there is much more to learn. Do you have a private class? And if yes, what does it entail to enroll? Okay, good. So for my private class, and then let me share my screen with you. We have currently an ongoing registration for people who are interested in learning one-on-one with me. And my one-on-one class, it costs for 3 months. I teach people for 3 months, and you can learn from me one-on-one for 3 months. So these are our services. The beginners, intermediate, and advanced service. These are just the monthly um, fee we charge, whereby you get full access to my training videos. We'll be going in depth into the charts. We'll be streamlining you to one pair, making you practice that one pair for a month, and then you access beginner life classes, access to my private community, as well as support and assistance. Okay, so my private community is where sometimes share free signals and all of things like that. So if you've passed the beginners, you can then go into the intermediate, and intermediate cost $80 for a month. It takes 2 months to pass or through the stage. So beginners, if you make good profit from the beginners, you can easily invest it into becoming an intermediate trader. And then if you want to go ahead and make trading a full-time job, that is when I advise them to go into the advanced. If you don't want trading to be a full-time job, you shouldn't go to the advanced. Okay. So, but I am trading full-time, so there is no other thing. So we also offer crypto trading, which is where we talk more on crypto assets, Bitcoin. The major things about Bitcoin, how to hold Bitcoin. BNB, all those things, this year strategy. And then how you can leverage on AI to make good profits on your Bybit and all of things like that. So, and then we also have this particular arbitrage trading where we focus more on the market shifts between different. I don't know if you can see my screen. Can you see my screen? Okay, good. So you can see my screen. So now, if you can see my screen, so we focus more on the shift in different brokers' price and all of this like that. So this are just how I make quick money in case I just need some, and then boom, I just all this are knowledge. Start on you farming. This is more. I don't know if you've seen it on on Twitter that do farming, right? You all these airdrops and so farm it actively, but we only farm airdrops that are that promising. We don't farm any airdrop yet. So we use more of the app, and a lot of things like that. So I hope it makes sense, guys. I hope it makes sense. So we were asking that currently can you explain particular one of to take on from one. When they come that from the prop firm from tomorrow, and I'm going to advise you, I'm going to just go ahead and focus on what if you want to take let's say it's account, just focus on that's the or you can use your support and resistance. Don't stress it. Okay, you can just use your support and resistance only. You don't have to trade everything you see. Okay, so you can just focus on your support and resistance, and then or you can also focus on your Fibonacci on gold. But I won't advise you to trade gold because gold will blow that account off So you want to focus more on just your regular GBP USD, Euro USD, and be patient. Okay. If you have any question, any issue, you can always send it to the group or send it to my DM. I will be there to respond to all messages. And please don't send me message for me helping you with one particular. Somebody messaged me yesterday night asking me for one particular BNB wallet. I'm not. If you're not in the VIP, if you're not in any of my classes or any of my, I won't have the conversation about all those things or any airdrop. So thank you guys very much for being a part of today's class. I'm going to have to cut it short here. And then I hope I've been able to impact you guys. I hope I've been able to impact you guys. So if I've been able to impact you, just go into the group and let's share because people are leaving. People who have left the group already, and it's fine, of course. But let's just share what we have learned so far. Or if anyone wants have anything to say, you can go ahead and share with us right now. Anybody? Okay, so if nobody, and then I'll call it a night here. Thank you guys very much. And this is D signing out. And then I'll be able to learn something from, and then I will see you guys later. Peace. Thank you very much. You're welcome, Mr. E. Thank you.